Hello, and a warm welcome to this week's video update. My name's Scott, and this is the edition 10 of the weekly updates here at Zenergi. So let's firstly look at the gas market and look at the changes week to week. So we can see a different story between a year one contract and a 3-year term contract. So near term prices are down 0.9%, so a minor decline there. We can see for a 2-year term or 3-year term, we've seen a gradual rise of 1% and 1.6% retrospectively. If we look at the graph itself, again, mentioned this in previous weeks, but it's holding very steady and consolidating at the kind of price range it is now, but we do have this week-to-week volatility still in prices. Power is a little bit different, so we have seen, just like gas, power has declined by 0.9% as well. However, in your typical 2 or 3-year term contracts, it's pretty much been flat week to week, so no change at all. But let's move on to what's been driving prices over the last week. So here are a few key events I wish to discuss. So firstly is that Russia cut off the Netherlands. So it was not so much of a shock, but perhaps somewhat unexpected, is that Gazprom did cut off all deliveries to Netherlands. This was over the rubles payment, and we've seen the same thing happen to Finland, Bulgaria and Poland in recent weeks. So Netherlands has just added to that list. So this was bullish definitely in the markets to begin with. So this happened around midweek and we saw definite upward driver in prices. But those fears were quickly eased as Gazprom did announce they weren't expecting any other nations to be cut off in the time being over payment disputes. So that quickly corrected itself. Oil had a very strong week, couple reasons really. So the main one was the EU did come to an agreement on banning Russian oil. So around up to 90% of Russian oil is expected to be suspended into the EU. There are only some slight concessions given to around East Europe, some pipelines which will be allowed to still flow, but all seaborne oil will be banned derived from Russia. So that was very bullish on oil prices, and it rose as high as $123 a barrel last week. Adding to this was easing lockdown restrictions in China. So for the last couple months or so, China has been in quite a strict lockdown, which has come with some demand destruction as well in terms of energy consumption. But they are quickly now unlocking, perhaps quicker than some people may have forecast. So restrictions are easing quite quickly there in many cities. And lastly, last week had very low wind generation really for most of the week. So poor wind generation seen throughout. We're talking less than a gigawatt of generation really. And that did put a lot of pressure on gas to power conversion to make up for that shortfall. So there are some drivers that we saw last week. Looking ahead to this week, we can see a few things to look out for, and some are continuing on from last week. So firstly is China's progression out of lockdown still. So we're seeing big movements from them last week, and that is expected to continue this week. We could see more cities lifted out of lockdown, and this will overall be quite bullish on the markets, you would imagine. It would put more pressure on the oil market, and it would also put more pressure on the LNG market as well, so directly impacting the gas market as well if China continues to progress out these lockdowns at a quick pace. Next is wind generation is expected to drastically improve. Last week we were seeing very minimal levels, whereas certainly the second half of this week we're going to see near maximum levels of wind generation. This will help to boost the supply picture, and that would likely be quite bearish on prices, particularly short-term day-ahead prices. And then lastly, there are some reports that the UK government are exploring bringing back Rough storage facility. So if you don't know what Rough is, it was an empty cavity out in the North Sea which we used to fill with gas storage. It was our biggest storage kind of facility by far. That was decommissioned around 2017 and has since remained decommissioned, but there are speculation that the UK are looking back to reinstating that. just to try and improve the supply security and try and make the UK more self-sufficient, really. So that's the argument for it. So we may see some news on that, we may not. It is just speculation, but that could be something to look out for next week if there's any further developments on that. One thing to say is, if there is any updates, it's unlikely to be reinstated very short term. I imagine that's going to be a factor that will come into 2023 more so, if it gets the go ahead. So that's a very quick snapshot of the prices and movements over last week. If you do want any further information, it's always available on our website. And we also have the Market Watch Live team as well, available 10 to 12 Monday to Friday to assist. So thank you for watching. Take care.